Welcome back to Click Capital, everybody. I hope you had a great weekend, and this is the week that Congress needs to get a deal done on the debt ceiling. With estimates, the US could run out of money to pay its bills as soon as next Thursday, June 1. Both sides really have to agree on a deal this week in order to get it through the House and Senate before next Thursday. So you can imagine if they don't get any deal done in the next couple of days, the markets should get pretty nervous and start selling off with a spike in volatility to go with it. But the markets aren't nervous yet. Pretty quiet start to the week here. Mixed across the board. We did see some weakness in the consumer and cyclical areas of the market. And once again, mega cap tech is holding out. We had a pretty good move here today in Tesla. No significant economic data out today. We do have PMIs out tomorrow along with new home sales. And then later on the week with Thursday jobless claims, and Friday we got some PCE and personal spending readings along with durable goods as well. Market pricing in a 1 in 4 chance that the Fed will hike on June 14. And once again we've got another Fed president, this time Bullard, giving more hawkish commentary and actually calling for 2 more rate hikes this year. And he's saying that's because economic growth is surprisingly robust and inflation isn't slowing down fast enough. He favors these hikes sooner rather than later and thinks he's going to have to grind higher with the policy rate in order to put enough downward pressure on inflation. So once again, more divergences from what the Fed presidents are saying and what the market is actually saying, what they're going to do with rates. And what debt ceiling says the market as we push the fear and greed index up to 70 now, almost in the extreme greed zone. And that's in large part due to the options market. Once again, 55% of volume today was calls and really low put percentages in all of mega cap tech. But it looks like dark pool buyers are getting more cautious ahead of the debt ceiling deal. They're significantly pulled back today with the DIX dropping down to 48% here after it had been quite elevated the last week. Corporate insiders as well selling stock at the highest rate for a few months, outpacing purchases 237 to 122 on Friday's data. And over to the charts, and the NASDAQ snuck up and found new year-to-date highs today. International stock indices not doing much except for the Nikkei, which had another great day yesterday in its local Monday session. And even though the markets were up a little bit here today, we did see volatility climb a little bit, probably pricing in the chance of this debt ceiling not getting done this week. However, overall, looking at the price action across the markets are saying that they are going to get a deal done this week. Both Biden and McCarthy really want to get it done too, because they don't want everyone in the world looking at them for causing chaos. And these put-call ratios continue to remain super low, so not much hedging going on the market. So if anything does come in and surprising, the market could have a swift sell-off as most people rush to add hedges. And breadth's still weak, less than half of stocks above their 20-day average. Growth versus defensive sectors still elevated up here, and we continue to see this rotation into growth and high beta out of defensive stuff. We saw that today here in the spread. Although contrasting that, we saw small caps put in a pretty good move today versus the SPY, actually closing above their 50-day on the spread chart. High yield as well continues to trade well versus treasuries. Got the 2-year holding at 432. The 10-year trading strong at 372. And once again, that December Fed Fund futures contract moving up here today to 4.78 as the market slowly joins the Fed in saying that they won't cut rates this year. TLT came off again today, and I started a long position in this for a few reasons. I think it's a good hedge on anything going wrong in the market, because if the Fed is closer to the end of their hiking cycle than the start, then this should provide a good asymmetrical bet to the upside, because if they do start cutting rates later this year or early next year, this thing should move back up strongly. And any other surprises or jolts to the market will cause a flight of safety into this, and technically speaking here, we're oversold below our lower buy-sell band. We can see the markets in a strong range mode here, and we do have some support around this 100 level, and that's contrasting high yield, which is almost back up at its 50. So treasuries here a bit oversold versus the rest of the bond market. Dollar holding steady at 103, commodities hanging in there at a big support zone, and crude holding up as well. So the Biden administration needs to buy back all that oil they let out of the Strategic Petroleum Reserve, so that should put a bit of a floor in oil around the high 60s. Saw a pretty good move up here in uranium today, almost 3% up on volume. And today, a lot of the overvalued stuff got a real good pop-up. We got ARK up almost 5% here today, along with clean energy, and Tesla was the big reason for the moves in both these funds today. Semi's still stalling up the top of the buy-sell band here. Biotech continue to trading strong, and oil and gas stocks floating with their 50-day here. Regionals had a good day, closing over their 50. And here's the rotation out of the defensive area of the markets. Now we got healthcare Staples, what came off a bit today, and utilities all well under their 50 days. BlackRock looks to have bottomed out, and a nice move here in Tesla today, up almost 5%. And looks like this thing may be catching up to its mega cap tech peers and going near new year-to-date highs soon. Got NVDA stalling out a little bit with earnings on Wednesday, so we'll be really watching that one. Apple gapped down a little bit, but Microsoft actually found new highs for the year. Same with Google, Meta, and AMD. And along with Tesla and ARK, meme stocks had a good day with some pretty good moves. We've got GameStop up almost 10% here today. And the AI stuff not giving up yet. Big Bear AI up 9% and C3 AI up 10.2%. And here's First Solar back underneath its 50. So we saw a week and a half ago we had this extraordinary pop on news that it made an $80 million acquisition, and the market decided to add on $6 billion of market cap to the stock. And so we've been short the stock from back here at 210, and we thought this was a bogus move, so we've held on and we continue to hold this short as we think it's significantly overvalued. And some pretty big down moves today in the consumer staples and products retail space. Coke coming off 2.1%, Procter & Gamble 2.6%, and Foot Locker got whacked again after earnings on Friday saw it down 27%. And some of the other retailers continue to trade weak, with Walmart, Target, Best Buy, Ulta Beauty, and Nike coming down hard 4% today. And looks like Hindenburg Research is winning the battle against Carl Icahn. His stock found new lows today, below 28 a share, off more than 10%. And got a bit of a pop here on PacWest above its 50. On news, they offloaded a bunch of construction loans, which helped its peers, Western Alliance and Zion's up too. And Wells is looking good again today, up 2.3, and Schwab continuing to hold on to its 50. So back over to the main indices, we now have a huge 400 plus gap between the SP500 and the global net liquidity model, meaning central banks are continuing to taper their purchases. And this market kind of just has a mind of its own. It doesn't matter about the debt ceiling, weaker retail spending, looming recession, and all of that. All that seems to matter is mega cap tech is strong, and a lot of people piling into call options. And we've also got the small end of the market acting well too, with the Russell looking good here above its 50 and microcaps having a pretty good day here on strong volume. The Dow continues to languish though below its 50, and even the equal weight NASDAQ is approaching new year-to-date highs. So once again, the market is really expecting this debt ceiling deal to get done on the next day or two. We may have some positive developments by the time I release this video, as they are meeting in the White House now. So it'll be interesting to see if we get a rally off that news when the deal does come out, or does the market sell off because it's already been completely baked into the price. Otherwise, it is a pretty tricky spot and time in the market here, so it's kind of hard to pick one direction or the other. That's why I'm staying market neutral in this environment. And that's all for this quiet day to start the week. Thanks for stopping by, and we'll see what the debt ceiling news brings us again tomorrow. Cheers.